What's up, everyone? It's Scotty with MoneyVest. So in this video, I wanted to go over 5 ETFs that I am most definitely going to be buying in 2024. It's kind of still crazy to think that 2024 is indeed here. We are now closer to 2028 than we are to 2017, which is, again, quite a crazy concept how fast time is moving. It's kind of fast and slow at the same time. So I really wanted to do this video, go over my favorite 5 ETFs that I'm planning to invest consistently. 3 of them are actually going to be, 2 of them are going to be new positions that I haven't really bought yet. And 3 of them I already own, and I'm planning on dollar cost averaging even more this year. So hope you all enjoy this video. Again, if you want to get access to all the alerts and find out exactly when I'm buying, what I'm buying, trading options, buy and sell alerts, Discord channels, everything's going to be down below with the link. There's going to be the Discord Patreon link, and I've extended that 16% annual discount for a couple more days for New Year's. So if you want to take advantage of that, link's going to be down below. So the first one on the list is, of course, going to be VUG. That's the Vanguard Growth ETF. It goes without saying that the Vanguard Growth ETF has performed really well in 2023, up a little bit over 30%. And of course, on the day, it is down over 1.7%, rightly so, because we, of course, were very overextended. We understood the idea that there's a lot of risk involved with the current market structure, the market breadth. Technicals are very overbought, overextended, so it's only a matter of time before we start to see a pretty significant pullback, and I believe today is one of those days where we are seeing a lot of big tech stocks and down anywhere between 2 to 5%, and of course, the nasdaq is down over 1.7, almost 2% on the day. So that's, again, going to pull back. We're seeing the RSI, MACD come down, so let the prices come to you. Very, very important concept is that patient pays over the long term, so let the prices come to you. Don't chase, only attract good prices and good deals, and let them come to you. That's the bottom line. So VUG is going to be number 1, and this is, again, the broader based ETF for the NASDAQ and S&P 500. So every single Monday, every single week, I'm planning on dollar cost averaging by about $1,000. I've been doing that for now almost 2 years. This position is profitable. It's done really well, so I plan on keep on dollar cost averaging into this position as well. The second one on the list is going to be the semiconductor. That's going to be the SMH, and SMH here also down over 2.7% on the back of AMD, NVIDIA down over 3.5% and 4.95% respectively. So again, very, very overbought. We knew that it's only a matter of time. It's not a question of if, it's a question of when it starts to pull right back down. But semiconductors, as we already know, are going to be incredibly important. So chips, artificial intelligence, technology related to semiconductors, all of that is going to be very, very important for the future technologies and digitization that we're going to see in the world. And that's exactly why SMH, I am very long-term bullish on this ETF and will continue to dollar cost average into this as well. This was our second experiment that I was doing as part of our DCA analysis, and I've continued to dollar cost average each week, and I plan on doing that moving forward in 2024. We'll continue to buy as part of our experiment, and VUG and SMH are 2 broad-based ETF that I, like I said, will continue to dollar cost average. The third one on the list is going to be biotech. I believe biotech has a lot of potential. In fact, this is outperforming on the day relative to NASDAQ and S&P. So biotech, small cap biotech is what I mean, up over 2.6%, and has rallied quite a bit since October. From $64, it is now up 43%. So, of course, year to date, it was still down. It was very, very flat, and biotech has not really performed over the last couple of years, I would say. So you can see that it has been trading sideways, and, theoretically, it's at the same price as it was in 2017. So it's been over 6 years of absolutely no performance from biotech, and this right here is a huge resistance that it's coming up to at $94, $95. So that is going to be that level to watch. But I do believe as interest rates are expected to potentially come down in 2024, there is a possibility for biotech to have a very stellar and strong year in 2024, and that's one of the reasons why I am going to be potentially bullish and long. So I'm definitely, in my opinion, it's going to be a big year for biotech, and I am bullish for this year for biotech. And LABU, which is a little bit more leveraged trade, definitely recommend you do your analysis and due diligence. And of course, none of this is financial advice, so please understand what you're getting yourself involved into, because this right here is the LABU. This is leveraged biotech ETF, which is very, very volatile and incredibly risky because it's up a little bit over 8%, 3 times more than the underlying XBI regular biotech ETF. So this right here is going to be that next resistance at 153. Of course, if we do see a breakout above this, targets are going to be $260 to as much as $300 and $400 per share. So in my opinion, lots of potential for this, but it does need to cool off a little bit because it has been on 6-7 weeks of consistent green. RSI approaching overbought levels, so I will wait a little bit more before I dollar cost average slightly more heavily considering how much it's already rallied so far in the last 6 to 8 weeks. And like I said, I believe 2024 could be a very strong year for biotech. Fourth one on the list is going to be cybersecurity, CIBR. Now, I'm kind of contemplating whether cybersecurity is going to be one because the volume is actually really low for this one. And, I'd much rather prefer some individual stocks like Fortinet, Palo Alto Network, Zscaler, CrowdStrike. A lot of these companies have rallied back up to almost new all-time highs, and they've seen hundreds of percentage of gains in the last several months. But CIBR kind of encompasses all those companies together in one single wrapper, and for that reason, CIBR is definitely at the top of my list of ETFs that I'm potentially going to be starting a new position in very soon, just waiting for a reasonable pullback considering how overbought it is at the moment. So you can see that it's already down 2% on the day with a very, very overextended, overbought MACD and RSI as well. And after 6 to 8 weeks of consistent green, it is now starting to finally show some signs of a potential pullback. So it's going to be on the list for me to potentially be buying. The first support level that I'm watching for this is going to be around $46, $47. So this right here kind of in line with this previous resistance. So got rejected here. Got rejected over here, and then of course a lot of consolidation and rejection over here before finally breaking out to almost new all-time high. So this right here is going to be that resistance at around $54 per share. So that's the range, and I'm going to be watching $46, $47. The moment it comes down to that level, I wouldn't mind starting a very small position in cybersecurity because this is an ETF. This is a sector that I have literally no exposure in, and I've always wanted to have some exposure in, of course, biotech. And then cybersecurity. Cybersecurity is the one that we're talking about. And last but not least, let me just try to remember which one that was. And that is going to be, yes, how can I forget? This was going to be small caps. Small caps, small caps, small caps. I believe IWM has the potential to perform really well in 2024. So this is another ETF that I will be taking advantage of in this year. And there's another one, TNA. TNA is a little bit more leverage for all the riskier folks out there. So very similar to LABU, which is part of XBI, and it's levered overall 3 times. TNA is very similar to that because it's leveraged 3 times against IWM, which is the underlying index. So we've got, again, coming up to that resistance, $211. We've seen a lot of consolidation for IWM, so small caps, I believe in 2024 have the potential to do really well considering how rates are expected to come down. And biotech has, again, struggled in the last couple of years, hasn't really performed well. Year to date was very, very flat. And of course, right now it is very overbought at the moment. So RSI, MACD, a little bit more on the overbought side at the moment, 64 RSI with MACD also pushing up. So we'll either take advantage of TNA and LABU from a trading perspective, but from an investing perspective, we'll be looking at IWM or XBI, which are, again, small caps and then small caps biotechs as well, along with cybersecurity, and of course the Vanguard Growth ETF, which is the regular general market index, and these semiconductors as well. So there you go. Those are the 5 sectors and ETFs that I'm planning to buy in 2024. The first 2 are going to be VUG and SMH. I'm planning dollar cost average each week. Not really focused too much on the technicals or valuations, maybe to some extent, but the other 3 will wait for them to pull back to give me the better opportunity that I'm looking for at reasonable levels once they become oversold, and that's going to be your cybersecurity, your biotech, and small caps. So let me know your thoughts down in the comment section below, and what do you think about these 5 ETFs and 5 sectors. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. There is a 16% annual discount that's available until the end of this sort of month. I've opened up a couple more spots because of New Year's, so links going to be down below. And as always, happy investing. I'll see you all in the next video.